Okay, now we're going to talk about bank levels, which is very similar to supply and demand. Let's get started with just a simple mechanics of what is a bank level. So first of all, price can be rallying to the upside, breaking structure, etc. And what happens is normally what you see is there's a break and a retest of structure, right? And then it goes long. So this is your basic support and resistance, right? You want to buy the market at this particular area since there's a break of structure, right? Now, what a bank level is price rallies to the upside, breaks structure, and then normally you see that it comes to the retest, but sometimes it just fails to retest the previous structure and then it goes long. Whatever happens next could be literally new highs, new lows, is irrelevant. It's just a complex pullback. You don't need to worry about it until eventually what you can see is that price has failed to retest this level, meaning there's so much momentum, lots of orders, there is unfilled liquidity. So liquidity has to be met, especially because there's going to be literally equal lows and double bottom traders all placing their stop loss just below. So think about the retail traders right now taking a trade at this particular area at the equal low setup, right? Equal low, basic double bottom, you buy the market. Yes, it does work sometimes, but what you'll notice is when traders are entering, their stop loss are either going to be below the double bottom or below previous structure here to the left, or even below the very conservative, very significant low structure right here to the left. And a TP, you'll notice that, again, simple TP, you look to the left and you're aiming for the previous structure. So this is a basic equal low setup, simple double bottom, retail trade and support and resistance. But if you look to the left, we can clearly see that price hasn't really retested the liquidity. There is a bank level that's been formed. There's so much liquidity here that made a new high. There's lots of bullish momentum. There's now a retail setup right here. And what do you think is likely to happen next? What's likely to happen is price then takes out liquidity, takes out all the retail traders, and finally comes to retest the unfilled liquidity here to the left to then go long. And this is what you call a bank level. So you're getting involved where most traders and participants are getting stopped out. So that's an example of a bank level. Now, sometimes what you might get is you might also get an imbalance. So the imbalance is very similar to the bank level. However, it's just the imbalance between the previous move down to this particular significant move here. So we've got this low, and this is the imbalance. All of this is the imbalance. So once you can identify the imbalance, this is also a scenario where price could also potentially reverse from. So you can have an imbalance and you can also have a bank level. So again, price rallies to the upside. You can see all of this. And then boom, there is an imbalance. There is a bank level right here. Look at that bank level. And notice the equal highs, notice structure. This is basic retail resistance. Stop losses will be placed above here somewhere. And normally what happens is price rallies to the upside, fills the liquidity, comes and retests the bank level, and then goes short. And where is price likely to go short to? Towards the next bank level. So if we go through another example, what can we see? Let's actually remove this one more time. So again, price could be rallying. Literally can just freestyle this and you could just do a bit of a mess. Okay, break of structure. Finally, a break structure. Where is the next bank level? The bank level will be here because it hasn't retested, but it's not valid until there is a failed retest. This is very important because what could happen next is price could drop to the downside, pull back, and then it just becomes invalid because it's retested. So normally what you want to see is price break structure, go for the retest. Obviously, it's looking to retest structure right here, right? And once it lifts off and it doesn't retest, then we know that there's going to be multiple bank levels and imbalances. And then what happens next is price will pull back to the downside and you'll see a clear setup, clear retail setup, equal lows, or a pattern or whatever, etc., only to see that it retests the bank level here to the left. Then it breaks out the support and then it goes long. But just to be extra conservative, what you need is a confluence. We need that boomerang. So look, we could even have a potential third tap of the 1, 2, and 3. And then what happens next? Pricing goes to the third tap, which is here, 1, 2, 3, then does a fake out to the bank level here to the left that hasn't been retested, guys. And then it goes long. So this is just a basic example of how a bank level is implemented. Now, again, once price rallies to the upside, right, then it pulls back. That's an example of a bank level, right? Also, what you can do is, again, the imbalance, which is from this particular low to that particular high. And this will be classed as the imbalance. There's an imbalance because there's so much liquidity here within this gap that hasn't been retested. So we implement the 50% fib and use that as a potential target to get involved on a long or even take profit. And again, the same rules apply. You will see some form of a retail setup, equal lows, or a boomerang somewhere, and then it just goes long. Now, if we actually see, yeah, there we go, look, potential boomerang, right? Or a third tap. So this is always the case.